Right, so I think we'll get started. It looks like most people have joined who signed up. And yeah, firstly, a very warm welcome. Thanks for taking the time to join our Q3 live webinar, where we look to give an update from the third quarter for our company and projects. If you do have any questions, we will have time for those at the end of the webinar. Please just type those into the chat box, and I'll be sure to get those answered for you at the end. We will be making some forward-looking statements. If you want more detail on that, please do go to our website or our corporate presentation where you can read those in detail. So just looking at our assets, not much has changed during the quarter, but still have a portfolio of high potential projects. Our flagship asset still that Goldfields gold project up in northern Saskatchewan near Uranium City. And of course, we've been completing a PEA or preliminary economic assessment for that project, and just wrap that up and release those results to the market on the 1st of November. And really pleased with how that went, an exciting development for the company. Our Strike and Mermac uranium projects, they're right near our Goldfields project, and they have potential for these high-grade basement-hosted deposits associated with the Athabasca Basin. We're not going to be talking about those in any detail today. We did release results earlier in Q3, really showing that we'd got all the right ingredients there for these high-grade deposits. We intersected elevated radioactivity in multiple drill holes across both projects, showing that the potential really is there for a discovery. Now, we're in the process of finalizing all the geochemical and assay results that have come in, and we look forward to releasing those results soon. And in our webinar next year in January, we'll have a chance to discuss that and show you all the targets that have been developed for the next round of drilling. But we're really excited by those projects, but by their omission in this presentation doesn't mean they're any less important, and really looking forward to advancing those assets. We still have the Ixhuatán project in Mexico. Been re-looking at that at a target generation scale and seeing some tremendous copper potential there. Previously, it was really a gold focused opportunity with Linear Gold and Kinross Gold, focusing on the epithermal gold side of things. There's a lot of porphyry and skarn related copper potential, and we've been looking at that with a view to unlocking that asset and getting it moving either ourselves or through a potential farm out or spin out. So moving on to the Goldfields PEA. This just outlining the process for the PEA. The first step was really an updated resource model, which was undertaken by SRK Consulting. And that included some of those drilling results we had obtained from 2021 during our phase 1 drilling. That went into the resource model. That resource model was then carried through into what we call the mine to mill optimization phase 1 of the PEA, where we looked at different throughput scenarios for the project to really determine what is the best business case to advance the project. Part of that wasn't just looking at economics. We did look at various social and economic considerations to make sure those were well accounted for before going through to the PEA study itself. That's obviously been completed on schedule, on budget. We've been really happy with the work done by really an incredible group of professionals from SRK, Moose Mountain, and Osenko, on schedule, on budget, and taking that a 7,500 ton per day production case into that PEA. So just recapping on the infrastructure, the project does benefit from established infrastructure, including the gravel road down from Uranium City, that's classified as a highway in Saskatchewan. The winter ice road, which runs during the winter months, that is maintained and by the government of Saskatchewan, and then summer barge access throughout the year, throughout the summer from Stony Rapids. It also has power to site. There's a hydro power line that runs from the hydro stations around 40 kilometers to the northwest down to site. That branch of the power line is not currently active, but the branch of the power that runs up to Uranium City is currently active, and that's of the same vintage as the power line to site. So some minor refurbishment required to get that power line active to deliver power to a mine in future. In terms of Uranium City, we operate out of there. We've got accommodations, we've got storage facilities, warehousing, our core processing facilities there. It's a small working town with a municipality. Provides bulk fuel. There's civil contractors with a lot of heavy machinery up there. They've been working on the rehabilitation of some of the older uranium mines, and a commercial airport where there's scheduled flights a few times a week to major centers in Saskatchewan. So really benefits from really good infrastructure at the project. The mineral resources, this is the new mineral resource estimate or update with an effective date of September 1st, and was released as part of the PEA. This work being done by SRK, and we're seeing the indicated resources are close to 1 million ounces of indicated, inferred around 200,000 ounces. The indicated making up about 82% of the resource. What's important to note about this resource is that it does still reconcile within 1% of the historical production. And that's at the Box deposit. So the Box deposit was historically mined as an underground operation, producing around 64,000 ounces of gold, sort of in the late 1930s. When we compare this resource estimate to what was mined historically, it reconciles very closely. And as we know, production is really the ultimate judge of the quality or accuracy of a resource estimate. So although those are historical records in terms of what was produced, it does provide additional confidence in the resource and gives us a good basis to move the project forward. And just reminding, this resource is based on a new geological model that we developed when we restarted the project in late 2020, and that is a structurally controlled model that really does honor the geology. So I think we have a lot of check marks there for a resource that is credible, robust, defendable, as well as reconciling to historical production. Compared to the previous resource estimate, which was from March 2021, our indicated resources are much the same, but that additional drilling, increasing inferred resources of around 20%. We also did use a higher gold price, around $1,800 an ounce for the constraints in the open pit. So this is entirely an open pit constrained resource. So I'm going to talk you through the mine plan as laid out by the PEA. And on the right, we just see a map showing the design of the site layout. And the first thing to note there are the two pits, the Box pit and the Thona pit. Those are really improved from the previous studies done by introducing a better cutoff grade optimization. So these pits are going to be phased. From a mining point of view, they're going to start together in year one. The reason for that is that at Thona, we got a very low strip ratio below 1. At Box, a good strip ratio of also 3.7. So these pits are going to start together, and really a phased approach to target some of the higher economic margin material early in the mine life. So really going after those high grades earlier on. And we're able to do that because we have a better control on where those higher gold grades sit through our geological or resource model that's constrained by the geology. And if you look at the chart on the bottom left there, we do see those higher grades being brought forward in production, and that really has a positive impact on NPV. While we're bringing some of those higher grades forward, we're also going to be stockpiling some of that low grade material. And in the site layout here, we see that low grade stockpile north of Thona, and the higher grade stockpiles are near the Box pit and a run of mine pad right near the Box pit. The waste rock, everything here is designed to optimize the operating costs. So we do want to minimize some haulage distances, but we've just, the waste rock, there's a pit just east of west of Box. That is the historical tailings facility where there's still historical tailings sitting in a small lake they call Vic Lake, which is contaminated, and when last checked is non-fish bearing. So that's planned to become a waste rock storage for Box. There's an additional waste rock storage just north of Thona, and then the main Box waste rock storage to the north. From this operation, processing at a central plant using a whole ore leach recovery process, producing tailings that will be in a slurry form, and those being pumped to a tailing storage facility, a really conventional design. And the initial data we have, it's at a PEA level, but the initial data suggests all the waste, the tailings as well as the waste rock is going to be non-acid generating. So there's no additional measures need to be taken to address that. Of course, we'll firm up on those assumptions at a PFS level, but certainly a benefit to the project having this non-acid generating waste rock and tailings. We should note that the mine plan is based on 99% of indicated mineral resources. You won't often see that at a PEA level, and that really means that to take this project forward, it's not going to require a lot of additional drilling to bring inferred resources up to indicated or measured in order to estimate reserves. So, can quite quickly advance us through the PFS stages, given that the basis of indicated mineral resources. This whole mine plan design is really to minimize operational costs, in the best way possible, and as well as environmental impacts. A lot of care has been taken here not to encroach on Lake Athabasca and to really minimize disturbance to local water bodies, smaller water bodies, and water courses. And it really fits quite elegantly into the landscape here. Even though there are limitations in terms of lakes and some higher relief, it really fits well, and it really is a project that is going to work. We just look at the production schedule summary. We see just some of those higher grades early on in mine life, and some of the rehandling of that material, the lower grades later in mine life. The project is really benefits from a very clean ore. It's very simple mineralogy at both Box and Athona, simple gold mineralization with free milling gold. Now, the gold is associated with quartz veining and some sulfide, but the sulfide contents are really low, around 0.2, 0.3%. There's no deleterious elements, so a very nice, clean mineralization to work with. There's been extensive testing going back years, so there's a really vast repository of data to look at these different ways to process the ore. We know from the historical mining, they report a 96% recovery. And over all these studies, there's really been nothing identified there where there's significant metallurgical or environmental hindrances associated with processing this mineralization. This flow sheet really rests on the most recent test work that was done in 2015 by Fortune Bay, which showed that flotation is not required as part of the circuit, and gold recoveries can be improved from where they were around 90% previously to around 95% through a more whole or leach and emitting flotation from the flow sheet. So really 4 main stages to the flow sheet here. The crushing circuit, it's a 3-stage crushing process, going on to a gravity circuit where they'll mill the ore through a ball mill, gravity concentrator, and taking those gravity tails, putting them through intensive leaching, and that leach solution pregnant with gold going through the electrowinning and doré production. Then also a really standard leach carbon in pulp circuit. The gold not pulled out through gravity will go through the circuit, cyanide leach followed by carbon in pulp. That's a very standard industry process, and followed by the acid wash elution, and finally through to doré production. So around 24.5% of the gold coming out through gravity, 70.8 through the leach CRP process, giving us a total gold extraction or recovery of 95.3%. That lining up quite closely to what was reported historically from Box, as well as nice increase from what we've seen in previous studies where recoveries were estimated around 90%, where they used the flotation and Merrill-Crowe processes. Overall, if you look at the chart on the bottom left here, a total of 835,000 ounces of gold recovered over life of mine. That averaging out to around 100,000 ounces per annum, and in the first 4 years producing around 122,000 ounces per annum. So through the mining of those higher grades, being able to bring more of that gold forward in production, which has a really positive impact on the NPV. So the economics, Really pleased with these results. Met and exceeded expectations through the way the project has been optimized, and our base case with a $1,650 US per ounce gold price, we're looking at an NPV of 285 million Canadian. That's after tax NPV, the IRR 35.2%, and a payback of just 1.7 years. As we look to our upside case, we've certainly seen gold prices up in that region recently at a 1950 gold price. We see that NPV approaching $500 million, the IRR 50%, and just a 1.3-year payback. So really a robust set of economics, which shows this project works at a range of gold prices and showing particularly good upside with improving gold prices. Overall, it's an 8.3-year life of mine, a very favorable strip ratio of 3:1. You'll struggle to find a better open pit strip ratio than that, certainly in Canada. 100,000 ounces per annum. That's a nice threshold. We believe there's going to be smaller miners out there that would be interested in looking at adding that to their production profile on an annual basis. Really competitive operating costs, all-in sustaining costs of $889 US per ounce, and a very low to modest capex of 234 million. Really modest in terms of getting a project started. And noting on that capex, 34 million of that capex is contingency. So we've been taking a conservative approach at this PEA level, and I think if you look across other Canadian projects, you'll find that contingency amongst the highest you'll find. So really conservative in that respect. From an environmental permitting side, I'm sure many of you are aware that the project does have a valid development permit, and that dates back to 2008 when the previous operator permitted got an approved environmental impact statement for an open pit mine at the Box deposit and a mill with a processing capacity of 5,000 tonne per day. So that permit is still valid today. These permits don't expire. So we've confirmed this with the government of Saskatchewan and are able to use that where possible. Now, to achieve the economics and bring this project to a place where it's attractive in today's environment, we've obviously needed to make optimizations and improve the economics where we can. So the development plan has changed somewhat from that what was permitted in 2008. Those main changes include the mining of a thoner that wasn't contemplated initially. And that's an important part of the project, given that low strip ratio and bringing some of those that gold forward in production. The changes to the processing I mentioned previously, we're looking at more of a whole ore leach, emitting flotation. We're getting higher gold recovery. That's having a good impact on economics, but we are increasing the tailings volume. So we're looking to expand that footprint for the tailings facility. That will need some additional assessment, as well as the increased throughput from 5,000 tonne per day to 7,500 tonne per day. This project works well at 5,000 tonne per day, but it's not the sweet spot for the economics, which is 7,500 tonne per day. So the PEA really lays out the best business case for the project. And now it's a matter of moving that forward and seeing how we can utilize the existing permit to expedite the timeline toward construction and operations. So these changes need to be addressed with the Impact Assessment Agency of Canada, as well as the Saskatchewan Ministry of Environment. It's really going to start by submitting a project description to the provincial government to be assessed. There's also going to be some updating of baseline environmental data required. That's going to include supplementing the past few years to show nothing's changed in the environmental environment from what was assessed in 2008, as well as extending the survey coverage into areas which weren't part of the original footprint of the mine plan. So there's really two scenarios under which we can use this development permit. The one is amendments under Section 16. The Saskatchewan Environmental Assessment Act allows for amendments, and we've certainly been given advice from SRK that what we're proposing in the PEA may be accommodated under amendments. Now that is a lengthy process and was beyond the scope of a PEA, but it's something to do leading up and within a PFS. So it may be possible to have this all kept within province through amendments. Alternatively, at a PFS level, one could scope the development and see where the triggers are for federal and keep the permitting in province by changing certain things. It could be throughput, it could be looking at expansions to throughput. There are various things one can look at to help expedite that timeline, because as we all know, permitting is a big challenge and can be can take time and cost a lot in Canada these days. The other scenario would be going through a more federal process, and that's all to be assessed in line with economics and potential timeline. But we certainly see the existing permit as a huge advantage for the project. It has undergone previous environmental screening, and we're looking to use that permit as best as possible, which will be done as we work toward and complete a pre-feasibility study. That's a lot of text in those previous slides and figures. So on the community, it's really all about the people. So I just thought I'd throw up some photos here to show the work and the relationships we've been building with the community since we've been working up there. When we started when we reactivated this project in 2020, before we put any boots on the ground, our first call was to the community, and that's through their representative called Yatenene Lands and Resources. And from day one, we've steadily built a good relationship with them, a trust-based relationship. We've had them on site numerous times for field visits where they've inspected all our exploration activities. We've also participated in numerous community events in Uranium City. Shown on the bottom left, there's the annual fishing derby where we've sponsored prizes. And we've really feel like we've built a good relationship with them. For 2022, we signed an engagement agreement with them, which covers off all our permitting for our exploration activities. And we're looking to continue to build on that relationship with Yatenene. We believe, through the relationships we've built, there's a desire to see another mine development in this area. It's obviously got a rich mining history through some of the gold mining, as well as the bigger uranium mines in the area. It's a community that's familiar with mining. It's got community members that have been involved with mining and even still work on mines, Cameco's mines. So a community that understands mining, and we believe a desire to see something happen in the Uranium City area again. Just turning to the key opportunities for the project, well, we still see exploration potential. From phase 1 drilling, we saw some quite nice grades at depth at Box, in the region of 8 to 13 gram a ton over widths of 5 to 8 meters. These are certainly grades that would support underground potential, provided we can show continuity to those, and particularly going underground, if you've got an established mill on site and those costs already covered, going underground, it could be a potential for the future of the project. And certainly the Box deposit is wide open at depth. It keeps going. We've drilled quite deep down there and still seeing some good grades. The underground potential was assessed at a very high scoping level as part of the PEA. We don't have a lot of drilling deeper down in the deposit, so that showed limited viable stopes at depth. What is needed there is some additional infill drilling to demonstrate continuity of those high grades, with the potential to bring that into a future mine plan from an underground perspective. There's also other prospects on the property that we've started to look at in more detail. These are shallow. They start from surface, both Frontier Lake and Golden Pond. There are some grades there, and while they don't have potential, we don't think, to produce millions of ounces, there could be additional resources for the project that can incrementally add and expand the life of mine and gold production. Gold recovery. We still believe there's potential to improve some of the gold recoveries beyond that 95.3%, and that's really backed by some data from the 2015 testing. We need to go and do a bit more metallurgical work as part of a PFS, particularly some variability test work to look at the recoveries across a range of grades. and there's scope to potentially incrementally improve that gold recovery. Ore sorting, we did some desktop work with SRK earlier this year and late last year, and the initial studies showed there is a potential to improve project economics and as well as reduce those tailings volumes. So something that should be looked at in more detail at a PFS level. And then from the sustainability side, and we're not talking really economics here so much, but really an opportunity to make this a green project. And that's through the electrification of a mining fleet, and combining that with existing hydropower, it really could be a green project that's going to be attractive from an ESG perspective. I'm going to walk through some peer comparisons here just to show where the project sits relative to other Canadian open pit gold projects. And these are projects where they've recently completed studies, so mostly in 2022, just one study in 2021 at similar gold prices. And if we look at the first chart, top right here, we'll see these various studies we're benchmarking against. They're all done 2022, apart from the study by Argonaut. And the gold prices used, we well within that range of gold prices used, our base case being 1650 per ounce. We in fact slightly below the average here, so certainly can benchmark against these other projects. We look to the left, the production, Fortune Bay with our Goldfields project compared to these other PEA or PFS or FS studies. We see ourselves with a really respectable mill head grade sitting, sit well within this group of projects in terms of annual production, and with a mill head grade that's the highest amongst this group. So certainly from an open pit point of view, we're not short on the grade. The strip ratio is the best amongst the peers compared, just a project strip ratio of 3:1 for Fortune Bay. If we look at the CapEx and OpEx, initial capital costs, it's a low CapEx, a low entry point to get a mine started with a view to, that 100,000 ounce per annum gold production. Both Maritime and Bonterra, benefit from some more recent infrastructure on site, which is why they have exceptionally low CapEx numbers. We certainly a really positive initial CapEx number there, and noting that our contingency of $34 million of the $234 million is certainly amongst some of the highest contingencies you'll see estimated, reflecting that conservative approach to the economics. And then the all-in sustaining costs, a really respectable number there at $889 an ounce for Fortune Bay, and sitting sort of in the middle of the pack there amongst peers. Looking at the financials and the chart on the left, while Goldfields is not a big project, we don't expect a huge NPV, but certainly from an IRR perspective, a very attractive, which is, giving that relatively short payback of just 1.7 years. So IRR 35.2%, and certainly really positive in terms of the other Canadian open pit gold projects we see with studies done recently. From an NPV to CapEx ratio, that's something a lot of people look at. You certainly want to try to be above that ratio of 1, and we're certainly there and showing a very competitive NPV to CapEx ratio, certainly ahead of a lot of peers in that respect. And I should just also mention, in terms of the CapEx, Fortune Bay having completed the study very recently means those inflationary increases that we've seen over the last year, we're talking 20 to 30% on steel, labor, fuel. That's all been built into our PEAs. So that's important to remember in terms of the economics that are being estimated here. And then the market cap, Fortune Bay sitting with a really low market cap at the moment, and obviously a highly attractive valuation. Market caps, of course, difficult to compare because these companies all have various projects in them, Fortune Bay included, which includes our uranium assets, and the Exotan project, which has indicated mineral resources of around 1 million ounces gold and inferred resources of around 700,000 ounces in gold. So hard to compare that, but I think if you look at just a US dollar EV per ounce basis, you'll be hard pressed to find better value in Fortune Bay. And we've got a path to development here and a project that we feel that really works well and is going to be attractive going forward. So in terms of looking ahead, on the exploration side, we do see that continued exploration potentially still at Box, as well as those other prospects on the property. Project development, we've really stuck to our schedule and managed to achieve everything on schedule, on budget. We now, with the PEA wrapped up, we're looking to turn to the permitting side of things and look at how we can best use that permit, as well as designing programs to start that baseline data collection again. Looking toward a pre-feasibility study. The NR 43-101 report should be out any day now. We're putting the final touches on that, and in that there's some recommendations. Of course, the recommendation is to move ahead with a pre-feasibility study, and there are some budget numbers in there which will be digested by the company and the board, and decisions made on how and when to advance. But it's certainly a project that works and has the ability to go the distance. Community engagement side, I mentioned that more formal project development consultation will start to happen at the pre-feasibility stage, where we'll consult in detail with the communities around the mine design. To date, we have shared the design with Yateneni, the community representative, and I'm due to meet with the community representatives end of this week to share some of these results with them and discuss the project in more detail. And just wrapping up our capital structure, we're still really tightly held with just 43 million shares outstanding, good alignment with our shareholders, 15% being owned by board and management. As of November 1st, our share price, 26 cents, that's come up a bit, giving us a current market cap of around $13 million. Cash on hand as of 1st November was 1.1 million. We've drawn down on that a bit through some bills wrapping up the PEA, but certainly enough cash to see us through to Q1 next year. Looking forward, we are looking to continue to advance Goldfields. We're looking to raise money to do some more drilling on the uranium projects. That's certainly warranted. So we still see some really good catalysts moving forward for the company, and really believe that now's the time to really follow the story in detail. So thank you for listening in. We'll make a recording of this available on our website if you want to watch again or share with anyone who might be interested. We'll look to do another live webinar in January or early next year, and share more on the uranium projects and the targets we've developed there, and potential plans for those projects for 2023. As always, feel free to get in touch at any stage. Various methods to do that on through our website, and I will turn to the questions now. And I see there's not many, which maybe I've done a good job explaining the PEA. Just one question: how long before the PFS? Well, we haven't obviously announced a PFS yet. That's got to be a board approved decision. The results, as I mentioned, certainly warrant advancing to a PFS, but we are taking steps immediately now to start looking at the permitting side in more detail, how we utilize that development permit as best as possible, as well as scoping some programs to get that baseline data collection started, which both are things that can be done at relatively low cost. And I think we are all wrapped up. There's one more question: is there any fatal flaw on either gold project that in total contain 3 million gold ounces and is valued at a ridiculous $4 per ounce? Good question. That's quite right. Across both projects, we have around 3 million ounces of gold. The PEA, let's talk about Goldfields first. The PEA really, it's done by a credible group that includes and we handpicked this group. Senco's a leader on gold projects in Canada. They've had a fresh look at this from the ground up, all the historical data, put together the study. We've had SRK do the resource through Cliff Revering, a very reputable guy. We've had Mark Liskovich, who used to work for governments advising on environmental permitting social. We've handpicked that team, as well as MMTS, Moose Mountain, with Mark Schulte, a very credible mine engineer on the mine plan. So these are guys who've come in fresh, they're independent, they've looked at it, they've put together the study, and there are no fatal flaws that they've recognized. We can obviously speak, but I'd rather let independents speak to that. And, you can certainly see that when our tech report comes out, it will be clearly laid out there, the risks and opportunities, and there's really nothing identified that's a fatal flaw for Goldfields. So that's some of our, almost half of our answers explained there. At Exwatan, where we have the other resource base, that project, tremendous exploration potential. We have, the resource, it's a historical resource at Campamento, but that resource was done in compliance with 43-101 and, by all accounts should be reliable. Obviously, it needs to be redone by ourselves as an issuer to verify that resource. But the project from a geological perspective has a lot of potential. Community-wise, it is more challenging. It does require a strong social program, and is one of the reasons we haven't got there immediately. Certainly during COVID, things were harder to operate further afield in those areas, but it is a pipeline asset we're looking to advance. There's very good upside on the geology side. There are some risks on the community side in terms of getting that going, but we do feel with a strong social program in place, that project can be advanced. And we've, as of even last year, we've had people go down and talk to some of the communities, and overall the feedback's been positive that there is a path to getting that project moving forward again. But it does take some legwork, and we will look to do that because we do think it's a tremendous opportunity in terms of expanding the gold resource there, as well as looking at the copper potential. And obviously we all know where copper might go in the future. Another question here, has the capital and PEA costs affected on inflation? Well, absolutely. The PEA being wrapped up now has incorporated all these inflationary increases we've seen over the last while. So, our numbers are current to today. We don't know where inflation will go in future. It's a lot of people are seeing inflation taper off in many areas at the moment. So those are all baked into our costs. So it does reflect the costs in today's environment. That's included all the recent inflation we've seen over the past year or so, and that's in the order of 20 to 30% for a lot of the costs we're looking at in terms of a mine development. Another question here, if you just complete a financing, how would you allocate the dollars to gold versus uranium? Good question. We see tremendous upside on the uranium at the moment. We've gone through the initial round of drilling, and we've definitely got some really good focus from that drilling. We also did some field work September, October, which are pointing to some really exciting targets there. So we will definitely want to allocate some dollars to the uranium to keep that moving. We'll do that in a very disciplined way now that we have some focus. On the gold side, really, the key would be to continue to de-risk the project. We do see ourselves allocating some money to exploration. So there's a few key areas there at Frontier Lake and Golden Pond, those surface prospects. Definitely warrant some smart drill holes, and we have some ideas around those. Those will be outlined in our tech report, as well as looking at that deeper stuff at Box and potentially, there's certainly 2 holes there we'd really like to drill, which would be part of a exploration plan going forward. And last comment, thanks, please don't JV it away. Well, thanks. We'll take that as a compliment that we did, our management's doing a decent job with the project. We certainly like it. We think it's got the legs. It works on many levels. It's in a great part of the world, and we think it's a asset that can go the distance. So I think on that note, there's no more questions, so I'll leave it at that. Thanks everyone for joining. Appreciate that. Get in touch if you have any questions, and enjoy the rest of your day. Thank you.